to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas, opportunities for you throughout this show. Well, it's finally here, January 20th, 2017, Inauguration Day, and Donald J. Trump is the President of the United States. Some people are going to shudder when they hear that. Stocks did have a hesitant week this week, coming into this day, really awaiting this celebration or protest, depending on really what side you may be on, and there's lots of both going on throughout the country. Stock market indexes really mixed for the week. A couple of the indexes edged lower. Nasdaq still the strongest index of the week as the FANG stocks continue to be quite firm. The dollar moved sharply lower on Tuesday. That was on Prime Minister May's speech in the UK, where she really talked about making a clean exit out of the European Union. That brought a big reversal in the pound as people were all short in there, expecting that kind of language would bring downside in the pound, which then caused the dollar to move in the other direction. The dollar had a big down day Tuesday, and that Brexit speech, I think, affected all of the markets. Really, for the dollar, it was only a small down week. The gold market moved up as the dollar moved down, of course, and then moved to our resistance level right around that 1218, 1220 number, and then fell off from there for a small up week. Silver pretty much same action. Better tone, though, in those markets as they're dollar dependent, very much so now. And if the dollar remains on the weak side, the tone in the metals is going to remain firm. Oil market moved down early in the week, but then there was talk of tightening in the market conditions in oil, and that got a boost for the oil market, which is moving up, and there been chopping really back and forth in a sideways band in what probably is a pretty long-term bullish configuration, just as we get some modest correction here in the oil market. Bond market had an early peak and then a midweek swoon, 3 bad down days really, and then started to come back late in the day on Friday. 30 years down somewhat less than 2 points, but still, bonds pretty weak on the week. So here's the big question. Can stocks survive the first 100 days of the Donald J. Trump presidency? That is a huge question. Or will forward-looking investors just simply be able to keep the Trump rally going? I wanted Hillary Clinton to lose. I mean, I made no secret about that because I wanted huge change in this country. Free markets, smaller government, the kind of things that really an economy can thrive on, because I wanted, good things for my grandchildren going forward. And I got to say to myself, you got to be careful what you ask for sometimes. When you listen to Donald J. Trump's acceptance speech today, it was maybe the scariest of all of his speeches because my focus is so much on the economic side of it. And man, was that ever a protectionist speech. And add to that, during the week, his choice for Commerce Secretary, Wilbur Ross, talked about tariffs coming, especially on China in the last week. You got to think back to the Depression, 1930, Smoot-Hawley, where they essentially put this protectionist program on, where they put tariffs on 20,000 goods. And I don't know how big these tariffs are going to be coming out of the Trump administration, but protectionism is bad, that kills trade. It sent the Depression in 1930-31 down in a spiral that they couldn't get out of for a long period of time. Yeah, that was a big contributing factor. You need world trade, you need free trade, and you need competition around the world. And yeah, sometimes that hurts the job situation, but overall, the consumer benefits from free trade. So that does scare me when I hear that. So the first 100 days, there are huge contradictions in policy that we're looking at right here. Obamacare, they say no one's going to lose insurance, but who's going to pay for that? And of course, Donald Trump is now pointing fingers at the drug companies who are feeling it in their stocks, and that's what the direction might be, that healthcare companies have to pay for it in the long run. And you got to really wonder if that's going to be a winning proposition for everybody, if that's the answer. You look at these the budget situation. We talk about cutting taxes, and they want it to be budget neutral, essentially, when they do that. But compare that to the fact that they're planning on cutting the budget by some $10 trillion over 10 years. That's an average of $1 trillion a year in budget cuts. Where exactly is that going to come from, since Donald J. Trump says there's no touching entitlements, where they've already cut the budget or are looking at cutting the budget in so many ways that there's going to be hardly any way to do that without going to entitlements. And maybe that is the right answer also, but there's big contradictions there too. I mostly like the appointments in Donald Trump's cabinets. I think tremendously smart people. I got to tell you, though, for Treasury Secretary Mnuchin, he scares me, and I think that is a bad choice. Why do I think it's a bad choice? Because it's really status quo. It's the same thing. Now, I haven't liked any Treasury secretaries back all the way to Paulson. I thought Paulson was terrible. I thought Geithner was terrible. I think Jack Lew was just an Obama kiss-ass man. And I think that here, Mnuchin, when I hear him talking about the fact that our debt ceiling, that he wants to just, raise that as soon as possible. We have to pay our debts, of course, that's what they say, with no real discussion about the fact that the answer is, and the reason we have a debt ceiling, is so that there is some sensible governance. How about talking about cutting back our spending so that we can meet our obligations, not have to keep raising all the time all of the debt ceilings and go through these battles all the time. So I think that Mnuchin is on the same course that we've seen these other Treasury secretaries, and I think that one is disappointing to me, and I am worried about it. So the first 100 days, what are we looking at? Protectionism, budget fights, fights with the mayors of cities over sanctuary cities and whether or not the money's going to be cut off there. Tons of fights going on the policy with people on the left and people on the right. Believe me, Paul Ryan is going to be pushing real hard when it comes on some of these discussions about the budgets and taxes and all that, and cutting entitlements. There's a lot of battles coming on. And then, of course, civil unrest it's already going on pretty heavily today. So the first 100 days, I think that the stock market is going to have a correction. And I don't think it's actually going to survive it. And I think that the people that have been buying the Trump rally, I think that they're going to give it second thoughts. We'll wait and see. But I think between now and April, we're going to feel some pretty good volatility. So that's my opinion on this first day of the Donald J. Trump presidency. So let's take a look at what happened in this last week, where we look at our 60-minute chart of the S&P 500, and here is that chart right there. You can see on Monday we were closed for Martin Luther King Day, and the indexes and foreign markets were still open, and there was some talk about that hard Brexit coming on, and that got the market soft and the indexes soft over the holiday day on Monday. On Tuesday, world markets, well, they were weaker. That talk of the clean break really brought some surprise action as the pound reversed up 4 pennies from its low, and the dollar fell really hard on Trump comments that the dollar is too strong. Let's decide if the dollar is too strong by letting the free markets work and end all this central bank manipulation on everything. Gold and the oil market and bonds were all up as the dollar fell, and U.S. stocks, they were weak early and rebounded and then sold off again. You can see that. On Wednesday, world markets were slightly higher. CPI was up 0.3%, as the core was up 2.2 year over year. So there's some pickup in inflation in there. Bonds fell over a point on that news, and then those Wilbur Ross comments talking about China dumping steel and may need tariffs, that wasn't a pleasant thing for the markets either. U.S. stocks were lower, and then they rallied again, as you can see right here. And the banks beat, talking about the fact that the Trump rally brought higher trading volumes, especially in the bond market, but that's only a temporary thing, right? So the bank stocks really didn't do all that well this week. We'll talk more about that in a little bit. On Thursday, world markets were narrowly mixed. ECB left rates unchanged, not a lot of movement there. Their QE is the same. And gold and silver had pullbacks on that day. And you could see we had a correction day. And as usual, the market comes back late in the day right there. On Friday, nothing happened. The world was flat overnight. China growth rate, 6.7%, slightly above what the expectations were. Focus was really on the inauguration. And right in here is when Donald Trump started using the word protection. And you could see what happened as the world traders started to think protectionism, that's the message, and that's not necessarily a good thing. And you could hear in his speech it was very hard line, and my opinion is that is going to remain to be an issue for traders, investors in this next 100 days. So now let's take a look at our calendar for the coming week. A lot of earnings reports pouring out in here, lots of big ones. Not much on Monday, Halliburton and McDonald's, but then you could see Tuesday, Wednesday, Thursday, lots of earnings reports out there, and you might just want to take a picture of this. Remember, these are only out of our universe of 320 stocks, and so these are, the most heavily traded stocks, and that's the ones we analyze and the ones we look at. So lots of earnings reports coming out that are really important. I'm going to have a lot of focus on Thursday afternoon, Amazon and Google and Intel. Those are some big ones, and Starbucks on Thursday afternoon. As far as the economic events go, the major ones are not this week. If anything, the biggest one may be Friday on the GDP or consumer sentiment coming out on Friday. So that is our economic calendar for the week. And as I said, you might just want to take a little picture of that and then hang it up at your computer. So now let's talk about what the best and worst stocks were for this week as we switch over to our charts and look at all of these pretty big movers as the important stocks that might give us some good ideas on trades are right here. Let's take a look at these charts, and here is the first one, CSX. CSX was the big mover for the week, and that one gained very significantly, 13%. Thursday was the best day in this stock in 36 years. It was up at one point 16% as activist investors came out and said that they were a target. So you could see that big move. What's really interesting in here is that, remember, we're looking at a 2-year chart here, weekly bars, and look at the big inverted head and shoulders in here that made that bottom. You could see the left shoulder, the head, and the right shoulder right there, and then it had a nice breakout. The measurement was right over here, and we celebrated seeing that, and you could see how much more it's done that, rallying from 34 to almost 46 on that news. Now you can see we have the projection. We think this is a little crazy, a little overdone, and that maybe some activist investors will take a stake in here, but we're thinking that this stock needs to settle back before it has any significant additional upside movement in there. Next one we're going to look at is energy, NRG, which is a energy utility, and this stock moves up. Also, I don't have any cycle analysis in here. It just doesn't cycle well. It's too smooth. It's very erratic. So I don't have anything really good in there. You could see the saucer bottom that formed in here. If there's anything technical that is really cool, it's this beautiful saucer that formed right in here. And then as it breaks out to the upside above the moving averages. And this one also is all about deal talk, activist investors. As a activist investor, took a pretty big stake in here. And, this is, usually we get more consistency in our analysis in the utilities, but this one just does not do very well. As far as the materials and the metal stocks go, let's talk about PAAS. This one had a big upside move, about 9% on the week, as they're buying a $25 million project. It's not all that much. It got up into our resistance area, and you could see our projection is that we think we're going to get some downside into March. We believe that about most of the metal stocks, gold stocks, silver stocks. So this one, I think, is a good example of that, and it's moved up into a sell area. So have a number of the other stocks that are in here, and let's look at PAS on the daily chart before I get out of here. And you could see this pattern right in here. Note the big shooting star and our projection that it's going to pull back in here. We talked about this one after this shooting star being a potential short for short-term traders, and we actually think that this area is going to be a tough area, and that is really the same story, we think, for GG, Goldcorp, Newmont, and AG, another silver stock, that we think they're up into resistance areas, and it's going to be pretty tough for them to make upside moves. Now, the stock we want to look at that had a big gain, we talked about this one last week, saying that Triple D, DDD, was getting some rumors about some potential buyout talks with GE, and because GE has been trying to get into the 3D printer category, and this one you can see gets another nice upside week. Overall, this is trying to build a big base, and if GE doesn't buy this one out, the stock's going to go lower. Because it's really been struggling. It's having a tough time in the industry. And once the news came out way back a couple of years ago about the 3D hubs that you could just essentially send your your design to a 3D hub and just get what you want printed, that really changed the whole attitude. So, I'm not exactly, there's no way to know whether this is going to happen with GE or not, but overall you can see our projection in here. If it doesn't, we think it's just going to fall off and continue to have a pretty rough time. Alcoa AA is another one we're going to look at. This one gets a pretty big lift. This discussion of tariffs gave Alcoa a lift, and that makes some sense. But the steel stocks, which started to get some gains, they actually fell off pretty hard because Citigroup downgraded them and talking about glut in steel. So there's a lot of contradictory stuff going on. You could see we think that Alcoa is going to fall off from here. It's up to a resistance area, and following through in this one is probably not in the cards at the moment. Take a look at Netflix, NFLX. We have been wrong on this one for the year so far. Well, the stock got a giant move on its earnings report. The earnings were a big beat as their international subgrowth was really big. This is on our list of the riskiest stocks for 2017, and so far, well, it's been a pretty good year for it as it's moved up already from this level right over here. It's just under 130 up to a high of 143, but it's trading at 138 right now. So it's a long way to the end of the year, and you could see our cyclical projection in here. Let's get a little closer look here, as our cycle patterns are suggestive of the fact that pretty soon it's going to roll over right over here, give some of that back, have some kind of a rally in here, and then out into this area here, it's looking like a weaker time period out into the late spring. Why do we have it projected this way? Well, we believe that the competition, especially out of Amazon Prime and some international companies, are going to keep that international growth from bringing the kind of growth that they're hoping for. And their cost of bringing on this original material doesn't get any cheaper. So that looks to us like a stock that we think is going to continue to see this tail right over here. That's why I say continue to reject those areas over the 140s and then eventually move to the downside. So that's a look at Netflix. The last one on the best of the week is Tesla, TSLA. This stock actually we're starting to really like. There are a lot of, this is a very good pattern and some really great strength in there. The news is analysts have upgraded the stock, lots of them. They were cleared on an investigation on that autopilot crash. What's our pattern look like in here? Well, we're looking for a minor pullback right in here and then another rally. You can see how we have it drawn right in here. We're hoping for a pullback here under the 240 level, maybe 235, and we think that is going to be the spot to be a buyer in here, and we're going to look for higher prices in there after that. So a little bit of pullback maybe in Tesla over the next few weeks, and then we think it is a buy. So that is the best of the week. When we look at the worst of the week, the few of the worst of the week were in the drug category, as Donald Trump pointed fingers at them. But absolutely the worst was Bristol Myers. Bristol Myers was down on the week, some 11%. There was some news in there a couple weeks ago on favorable results on a Merck competing cancer drug to the drug that they had. And now Bristol Myers came out this week and they said that they were not going to look for accelerated approval on their own cancer drug. That was taken as bad news. And you can see in here, as we look at Bristol Myers, this stock moved pretty sharply to the downside. And let's just look at these last three cycles right in here. You can see the cycle rhythm right in here. Those two blue spikes point to a low coming sometime in late February or early March. And this declining period in here fell right off of that resistance, right under that 34-week moving average. And we would call that pretty perfect when we look at that. So Bristol Myers on the news down pretty strongly. Take a look at Target, which warned on holiday sales, just like a lot of other retail companies have done. Look at this as it gets into this resistance zone back here in November and December, and then just rolls over in this last week, this big decline. This calls for a low sometime in February or early March. Also, when we look at this, and these cycle brackets on the bottom help us with timing on these cyclical rhythms, you could see very clearly in there the cycle rhythms in there and how nicely they match up. As you have this low right over here comes right here. Each of these lows kind of points to low areas. They don't have to be perfect. And you could see the cycle rhythms in here. Here's your bullish rally that breaks down. Here's your downward stair-step movement. Here's a false big upside move that comes and takes out the low. That is really weak action. This one fails at the resistance zone. This one fails at the resistance zone. And the next rally phase is due coming out here sometime in March. So really weak, horrible action there in Target. And we will say that that one has more work to do and potentially more damage to come in there before it's able to get a real rally. Next things we're going to look at is the banks. Now, the banks were weak this week, and they gave up a lot of ground, even though maybe earnings were not all that bad. One that was bad was NTRS, Northern Trust. Their earnings missed, and this was on our riskiest 18 for 27 also. So there's one right, one wrong that I'm reporting today. So far, it is a long year, and the pattern in here is suggestive of a decline here into late February or March. You're going to see lots of those things, which has me believing that the stock market could could be into some problems here as we move in through the winter period and into Donald Trump's first 100 days. So this is a bad-looking pattern. You could see that in there. Let's look similarly to what happened to BK, Bank of New York, as they reported earnings. Also, their revenues missed pretty significantly, though the earnings were in line, and analysts have downgraded this one also. So the next low, you could see these two, they pointed to this low. You could see the diamond consolidation in there, the breakout, and then it turns down. So in other words, this pattern rolled over and now points to, yes, late February, early March for the next bottom in here. So we're going to look for it to come down, get some support around this 34-week moving average, and maybe even lower than that to these lows over here under the $40 area. So a lot of risk, we believe, still in Bank of New York. And the whole concept of the banks doing well from higher interest rates might be on hold for a while based on what we're seeing in here. So also another one to look at, similar to what went on in here, Goldman Sachs. You could see that in there as their earnings were a miss also, and even though that they had good trading profits from the big action in the post-Trump win, the didn't help. And guess what? Through late February, early March also, maybe this one gets down to about 212 based on that pattern right there. So the banks are in this corrective period, and there could certainly be a lot of risk as we get 7% down in Northern Trust, 6% down in Bank, and Goldman Sachs, you could see also down pretty significantly on the week. Also, we had Citigroup down about 4% on the week, and JP Morgan down about 4% on the week. One more stock we're going to look at in here is CLF, CLF. This one down about 6% on the week. I think this was really a result of maybe Alcoa was an anomaly because most of the material stocks and the steel stocks were weak. U.S. Steel about unchanged on the week, and Cliff down about 6% on the week. These stocks did pretty well, but again, if we're looking at the Trump policies not coming online for 1 or 2 years, that's a long way to look out. And now you could see this is in this corrective zone, down 6% on the week. AK Steel and Schnitzer Steel both down about 4% on the week. So the materials are starting to have a rough time of it, and it's got to all be about some caution based on how far and how fast they took them post the election in November. So that is a look at the best and the worst stocks for the week. So coming up, we're going to do our short-term view for the coming week for the stock market. Before we do that, I want to remind you that you can become an askSlim member. Our short-term view is for members. We look over the 5 major markets and do some amazing momentum analysis in there. So if you want to get that, become a member. Write me an email at slim@askSlim.com. I'll send you a special half-price link to try it out for the first month and get all of our 200 videos. So send me that email, and I'll be glad to send you that special link. So let's take a look at the S&P 500, SPX, as we look at our short-term view for the coming week. We thought that last week we would be in a range of getting up to about our resistance level, big resistance at about 2290 to 2300, and we thought it would come down to approximately 2250. So we had about a 40 or 50 point S&P range that we expected in there. It was actually a much narrower, slower week, as we didn't get up to the high level as people were waiting for the Inauguration Day, and we didn't get down to that low level. So we had the right idea and the right shape, but basically not yet as far as that goes. Now, this is the weekly chart. I don't normally show that on the S&P 500, but I wanted to see that big resistance level right there and how this declining period right over here goes out to that February-March period, this one out to March, that lines up with so many of those other stocks. So the reason I'm showing you that is because I want you to see how there is risk here coming up and why we have somewhat of a negative bias for these first 100 days of Donald Trump. So let's take a look here at our short-term view. And what we expected was getting up to that high area. Well, it didn't quite do it, did it? As we had, attempted a rally, but not very far up to the 2270 something. And then the low of the week was right down over here. And these were really, really narrow days. So not exactly what we expected, but you could see in here now what we expect is that there's some risk coming into the market right now in the next week. So our short-term view for the S&P 500 is that we're going to get a down week this week. We're looking for this area right around 2250 at the bottom of the minor support, with the possibility, if the market turns weaker, of 2234. So you could see our projection in there that we expect some decline in here, then a rally which then fails again, and a bigger acceleration down out here. So that takes out about 3 weeks picture. If it turns out that the sell-off we expect is stronger, then it'll come down to like that level. Then you will test this. That would be a much more negative scenario, and you would have something like this setup. So we're looking for these cycle rhythms to tell us. That's how we look at markets. And this support area is key, as you can see, as is that resistance area that we showed you right up over here, where that's at about the 2291 to 2301 area. And we have some doubts about it getting up there now, and a lot of doubts about that 20,000 Dow occurring before we get some significant correction. So we saw how the market reacted after Donald Trump's speech, and we think a new tone is set, and that we're likely to get some correction in the market here. We're going to call it a down week coming up in the stock market for the next week. That is it. We covered everything we're going to cover. I hope you've have some good information for you, and that you found some good ideas in the best and worst for the week. And of course, we look at a lot of stocks, so making sure you check in and see our membership videos. That's it. I hope you have a great weekend, a safe weekend, because it is crazy out there this week, and we're always wishing you great trading.